Global stocks, dollar slipped on weak U.S. jobs data, oil off heights. Surprisingly weak U.S. jobs data soured sentiment for risky assets on Friday and oil prices retreated from the one-month highs hit earlier in the day as risk of escalating U.S. military action in Syria ebbed. U.S. employers added the fewest number of workers in 10 months in March, but a drop in the unemployment rate to a near 10-year low of 4.5% pointed to a labor market that continues to tighten. Stocks and the dollar, which were trading flat before the data, slipped. S&P 500 futures fell about 0.3% while the dollar weakened against the yen and the euro. The probability of the U.S. Federal Reserve hiking rates in its June meeting, which was as high as 70% overnight, fell to 57.7%, according to Thomson Reuters data. It's a little less than expected. "This is an economy that's getting better, but it's not getting better quickly," said Peter Coaster, president of Empire Executions Include in New York. "I think the Federal has wanted to see wage growth a little better, and they're not getting it," said Coaster, who added he expected markets to react negatively to the data. Earlier in the session, the U.S. missile strike on Syria hit risky assets, though prices recovered after a U.S. defense official told Reuters the missile strike was a one-off, helping to calm market nerves. Oil prices, which surged more than 2% in Asian hours, gave up almost all of their earlier gains. Brent crude futures were last up 0.3% at $51.72 a barrel. U.S. West Texas Intermediate WTI crude futures were flat. The U.S. missile strike on a Syrian airbase overnight caused a knee-jerk shift into safe havens, although the impact was moderate as it is being interpreted as a one-off proportionate response, said Ian Williams, a strategist at Peel Hunt in London. Demand for safe haven assets such as gold remained intact. Investors had already been on edge with talks poised to begin between Donald Trump and Chinese leader Xi Jinping over flashpoints such as North Korea and China's huge trade surplus with the United States. Investment flows underscored a broadly risk-off tone in markets in recent sessions. The latest data from Bank of America Merrill Lynch and fund tracking firm EPFR showed investors pumped $12.4 billion into bond funds over the past week while pulling $7.4 billion from the equities, the largest outflow in 40 weeks. Spot gold was up 1% while high-rated Eurozone government bonds edged lower. The yield on Germany's 10-year government bonds fell to the one-month low. Overnight, U.S. Treasury yields dropped to their lowest level in over 4 months. Safe haven flows are always affected by political events, and when it affects countries where the U.S. and Russia are interested, then investors become even more nervous because of relations between those two, said Dawson Bank strategist Daniel Lentz. "Especially now you also have talks between the U.S. and China on North Korea," he added.